All right, traders, welcome to today's end of day market recap. This is Christian from Tribeca Trade Group, and the risk disclaimer in front of you. Please read the full risk disclaimer. Everything that we're going through is for information purposes only. So let me get to the market action. I want to try to keep the video kind of short today, but we'll see what we can do. Really, I see a couple things that are going on with this market that are making it a bit complicated. Really, I think it's more of the same. And if you have been a regular viewer of my video, you know what I'm referring to. It's that interest rates continue to go higher, and the US dollar continues to go higher too. These are generally two headwinds for the equity market, right? The equity market does not like when the US dollar goes higher. And also with interest rates, right? As yields go higher. And again, what we're talking about in terms of interest rates is not just what the Fed is talking about. I know that gets confused a little bit on days like this because it was the Fed minutes today, and they're talking about whether, trying to get some hint about whether or not they're raising interest rates. But what goes on here, what we're looking at is the 2 to 30-year bond rate, and that's across the curve, right? What the Fed controls is the short-term interest rate. They don't control any of these rates, and they're just basically going up by supply and demand and by other factors that are being worked through in the economy. Notice that what's taking shape here, and which has been more of a story in the last few months, is that it's not so much the 2-year and the 3-year interest rates, which are still higher than the 20 and 30-year, but what's really been kicking up higher is the long end, what they call the long end of the curve, which is the 20 and the 30-year, right? So why is this important? Well, let's look at a couple things, right? So let me bring up oh, I want to do it this way. Sorry about that. Let's do 2-year, and then we will get to what the indices look like as well. But here's what the 2-year is, and what I'm going to do is I'm going to bring in. So here's what happened. Let me go. This should be 1 year, right? Let's see if I can bring up. I don't know if it will let me go 2 years, but let's see. Okay, so here we go. So here's what's been happening, right? Is that yields, which were down at 0%, have moved up to 4.9. Notice the different times where there's been volatility, right? Now what I want to do is bring in SPY, if I can do that here. Let me go back to 1 year. Maybe it's not letting me do it because I put in a different time frame. So let's go 1 year. So what I did here is I put the SPY chart on the bottom, and the white line is the 2-year yield in treasuries. So what's happening here is that you could see that when equities basically bottomed in October, right? That was very close to where yields peaked. Okay, so that's where we peaked. We kind of hung around for a little bit. We did march higher, right? So this was the high of this year. Notice what equities did. They kind of moved down here a little bit. Since they've been moving up, right? And this really comes into play here when we bring in the 30-year, which I'm going to do right now for you guys. All right, so this is the generic 30-year, and I'm hoping that it will keep the SPY chart in there, but it may not. It didn't, so let me bring in SPY. Okay, so SPY's on the bottom again. And again, notice notice the big ramp in the 30-year interest rate, right? Once that kind of peaked out, again, it's not perfect, right? I mean, you have to kind of keep in mind that these relationships, it's not going to be one for one, right? There's many other factors at play. But this was not a coincidence, at least it was to me, that interest rates started to go down and equities bottomed, right? Now, the market can also handle, again, this is all my opinion, right? The market can handle smaller adjustments and gradual adjustments. What equities don't like is when things start to move quickly. So here's what we have, as rates have started to move up again, right? Notice this big last move. You could see that equity prices have not liked it, right? And that's the issue at hand. You could also do this exercise with the dollar, right? And if we look at where the dollar is right now, and you could look at this in terms, we're just going to bring up UUP. and I'm not going to do the exact same exercise, but you know, when maybe, let's just see if I can do this here, right? So let's bring in SPY once again. Okay, now this time SPY's up here, but you could see when the dollar started to ramp higher, right? That's when we really kind of spilled lower, right? Here's where the dollar started to gain strength. Here's where the S&P started to move lower. So it kind of gives you a sense when the dollar is moving higher, it is more risk off, and risk off means, you know, equities are not going to be in high demand. So we haven't taken this out. So I think this is partially one of the factors that the market doesn't like right now, but I think it's more about interest rates. Now, I think it's important to keep an eye on what the dollar is doing, because if that continues to move higher, I think that equities are going to continue to move lower. All right, so that's a couple relationships that I think are important right now. I think they're telling you a lot of what's going on right now. And again, I think this helps give you a little bit more depth and an understanding at what's going on in the equities, because it's not just equities. The bond market is very important. It's a bigger market, and some even say that it's a smarter market than equities. All right, when we look at what got hit for the day, right? Clean energy stocks are on the bottom of the list. If you look at what's been going on over here, right, in this box over here, you know, year to date and 5-day and really month to date, notice what's getting hit the hardest, right? The ARK Innovation ETF is down 18% month to date, right? The IBD 50 is getting hit hardest. Growth stocks are getting hit harder than value stocks are. So again, that tells me, because the ARK, if you look at the ARK basket, I know that they call it innovation, but it's really growth at any cost, right? Those are the stocks that are in this, right? And they're faring worse when you have higher interest rates and a higher dollar. Right? Certain things are going to hold up better. Certain things are going to get hit harder when you've got higher interest rates. So, and again, you could look at just the major indices, right? SPY's holding up a little bit better than what's going on with small caps and what's going on with the Qs, right? Not a huge differential, but there's something to that. All right. So again, just giving you a sense of where the trouble spots are right now in this market. S&P, right? And let's start with the weekly chart here, and we'll do this really quickly, right? But this looks like to me so far just a normal pullback, right? And it's not even anything that we experienced like back in here or back in here. We're just kind of coming off some really, you know, decently overbought levels for now, right? And it is August, it's the middle of August, right? There is some seasonality effect. A lot of people are taking vacation right now. Not a lot of buyers right now in this market, right? These are pretty general things. So one of the things to realize is that we've broken the 50-day moving average. You know, that's a no-no. We are trending down, and we're looking for where we're going to find support and where buyers may start to come in. I think it may be around 44.09. Why do I think that? Because this is a virgin point of control, and this is where there's a lot of volume that previously happened in here that we have not revisited, right? So that could be a possible demand zone. It doesn't have to be. We have to see once we get there. But there was a lot of volume here, and we haven't revisited. So it becomes a level of interest. Same thing with the Qs. Now, this is kind of interesting today. We finally did take out this. This is, if you're a regular viewer of my video, you know that I've been talking about that once we broke the value area, the next really big area of support could be this virgin point of control, because again, it's an area of big volume, right? So we have to kind of wait to see, and here's where the P word comes in that you hear me talk about a lot. So just be patient with this, right? When prices below the 5, the 20, the 50-day moving average, that is not an area of strength, right? So let it play out. Let institutions start to come in and start to buy, right? And start to support the market like we saw, you know, and again, this is where the biggest volume was going back 2 months ago. So we'll see if this is around where it's going to be. If not, and if we continue to slip lower, then I would say, you know, continue to try to be defensive, right? That is all, that's my opinion. And again, not giving out advice, but I think that's the best course, right? And the small caps also, which have been moving down rather quickly, 184.88 is a level of interest as well. Now, again, here's an example. This is just on the 1-hour chart, but, going through like a name that reported earnings today, where did Target stop, stop going up in the pre-market? Right where there was overhead supply, right where there was one of these virgin point of controls where a lot of buyers and sellers previously met up, right? And the sellers won out, right? So again, it's an area of interest. It's where buyers and sellers are going to battle it out. And if there's no incremental buyers, right, then what happens is the sellers are going to, reject the price action. All right, guys, that's it. There's other things that we could go over in this video, but I think, we want to keep it very, very, the scope pretty decent, broad right now, because when the volatility does start to pick up, correlations begin to pick up, right? And it doesn't matter too much in regards to single stocks when volatility is ramping higher. Now, one other thing to note here, and this is probably a good place where we'll leave it, is that volatility is not really ramping higher here. It's kind of just a slow grind lower right now, even though today was a little bit faster. But we're not seeing a major jump in volatility. So again, you just have to be patient. We don't really have a signal here, right? Here, this is the VIX, right? This is the volatility of the VIX, or the second derivative of that, and the VVIX is also right around the high of the range. So again, it's all these things right now are basically telling us to sit on our hands and wait to see if some of those pivot levels with the virgin point of controls, if buyers are going to step in there. All right, guys, that's it for today's video. Have a great night. Thank you for watching, and I'll see you guys tomorrow, hopefully in the trading room.